I am going to teach you how to read a candlestick like a pro. I am going to decode every candlestick and then the psychology behind the formation of every candlestick you see on the chart. Are you a new forex trader? Are you struggling to make money in the financial market? I'm here for you. Please, if you come across this video, make sure to get yourself a chair, a cup of coffee or a tea. Watch this video until the end. You will be able to analyze the basic candlestick. This video will be divided into two parts. The first part will be about the basics of every candlestick. The second part of the video will be about the double top, the double bottom, the head and shoulders, the inverse head and shoulders, the haramis, and many more. One of the best language of the financial market is candlestick chart. So before you become a successful forex trader, you need to understand the language of the financial market. What the market is telling you before you invest your hard-earned money. Before you place any trade, you need to understand what the market is telling you. Else, you will lose all your investment. So please, education is very, very important in the financial market. Without education, please do not invest your hard-earned money in forex trading. Forex trading is not a scam, but you need to learn. You need to buy books, you need to learn before you become a successful forex trader. Now, what is candlestick chart? Candlestick charts are used to record the prices of an asset during a specific period of time. Candlestick chart is not the only chart used in the financial market. You have a line chart, you have a bar chart, you have a histogram, you have many other charts used to record the prices of an asset. But from the 17th century until the date, many successful forex traders have been using a candlestick chart because it gives every information in the financial market. Candlestick chart is being originated from Japan during the 17th century. It was being used to record the prices of rice during that time. So from the 17th century, many billionaires forex traders have been using candlestick chart, which is the best language of the financial market. Now I've briefed you where candlestick chart is being originated from and then the meaning of candlestick chart, which is used to record the prices of an asset during a specific period of time. Now let's dive into the board so that I will explain into details what a candlestick chart, the formation and then the psychology behind the information of every candlestick you see on the chart. My name is Kinjawara FX. Please, if you come across this channel, make sure to subscribe to the channel, like and comment under the video. Now let's dive into the chart so that I will explain more about what a candlestick chart and what this is a rare definition of what a candlestick is. Candlestick gives four pieces of information. One is the opening price, two, the close, three, the body, and then the fourth one is what? The wicks. So every candlestick must give you these four pieces of information. It doesn't matter the color of the candle. If it is black, white, green, yellow, pink, you have to be able to determine the opening price, the close price, the body, and then the wick of the candle. The closing price of a candle is very, very important because it shows if the candlestick is a bullish or a bearish candlestick. So please don't forget the closing price of a candle. Now you have only two. What a bullish one, you have what a bullish candlestick. Or what bias. Number two, we have what a bearish candlestick. Or what sellers. It's like going to the market. It's either you are going to buy a particular thing or you are going to sell. So bullish is for buyers and bearish is for sellers. A bullish candlestick. A bullish candlestick is formed when the price is closest above the opening price. So a bullish candlestick is formed when the price is closest above what? The opening price. We get what? A bullish candlestick. So here becomes what? The open, the close, the body of the candle, and then the wick or shadow of the candle. So this candlestick here has been able to give us what? All the four important information of a candlestick. The opening price, it closes above the opening price, so it becomes what? A bullish candlestick. Then the second candlestick is what called what? A bearish candlestick. It's called what? A bearish candlestick. A bearish candlestick is formed when the price is closest below the opening price. So this is the opening price. The candle closest below the opening price. We get what? A bearish candlestick. So this place become what? The open, the close, what? The body, and then what? The wick or shadow. So now we've gotten to know a bullish candlestick or buyers, a bearish candlestick or what? Or sellers. Now let's dive into the next part of our learning. Now we've gotten to know what a bullish candlestick and then a bearish candlestick and then the futures of the two candlesticks. Now let's go to the body types of each of the candlesticks. Now let's start with what? A bullish candlestick. For the purpose of these teachings and then the whiteboard, I'll be using a black marker for what? For a bullish candlestick and then a red marker for what? For a bearish candlestick. Now let's start with what? A bullish candlestick. Okay, a bullish or what? Or bias. If you look at a chart very well, or if you have come across a candlestick, you may see a large or a long body candlestick formed like this. Then you can also see what? A short candlestick formed like this. Since it is a bullish candlestick, of the opening price is where it's here, the close price is where, and this place become what? The body. Same apply to this one. Now the difference between these two candles is that this candle shows what? A high momentum in the market. During this time of trading, the buyers bought more of the asset during that specified or during that specific period of time. And this short candlestick also what? It shows a less momentum in the market. During that specific period of time, the buyers bought less of the item. Now let's draw more of what? Let's draw more of a bullish candlestick. So we may see what? We may see a bullish candlestick like this formed very high. Another also same bullish candlestick forming like this. We may see another bullish candlestick also forming like this. And then we may see what? Another bullish candlestick also like this. These are all what? These are all bullish candlestick. It is telling us a story in the financial market. And what is this story telling us? This is what? A long body candlestick, followed by what? A medium range candlestick, forming by what? A little less medium range candlestick, and then what? A short candlestick. So a high momentum candlestick, a medium high less momentum, and then more less momentum candles. This is telling us that the buyers are losing momentum in the market. The buyers are no longer buying more of the asset. So assuming here they bought 50, here they bought 40, here they bought 30, and here they bought what 20 of asset. So the buyers are what they are losing momentum in the financial market during that specific period of time. Then another scenario also we can get same bullish candlestick, we may get what? A short body followed by what? A medium range candle followed by what? A large range candlestick. This is also telling us a different information in the financial market. Here they bought less of the assets. Here they bought a medium, and here they bought what? High. So here if they bought 10, here they bought 20, and here they bought what? 40. This one is also telling us the buyers are gaining momentum in the market because they are willing to buy more of the assets during this specific period of time. So you have to understand what a high momentum and then a low momentum. This is a high momentum candle, and this is what? A low momentum candle. From the bearish side, we may see what? A high candle followed by what? A short candle. So the higher candle is showing what? Here becomes what? The opening price. Here becomes what? The close price. Okay. This one is showing what? A high momentum. During this time, the sellers, they were willing to buy more of the asset during that specific period of time. And then this short candlestick indicates during that specific period of time, the sellers were not willing, or they didn't bought more of the asset during that specific period of time. Now let's do more examples about what? About the bearish side. So we may see what? You may see a huge bearish candle followed by what? A medium and a what? A small candlestick. The first one shows what? A high momentum candle, a medium momentum candle, and then what? A low momentum candle. So this one shows what? The sellers are gradually losing control of market because the sellers are not willing to buy more of the assets. Here, if they bought 50, here they bought 30, and here they are buying what? 20 of the assets. Now let's do another more example again. So if we see what? A short body candle followed by what? A medium high momentum, and then what? A high momentum candle. This one shows that now the sellers are gaining momentum in the market. They are willing to what? They are willing to sell more of the asset during that specific period of time. So if here they bought 10, here they bought 30, and here they bought what? 50. So the sellers are doing what? They are gaining momentum in the market. Now let's do more examples about the bullish and then the bearish candlestick. These two candlesticks are showing what? A high momentum in the market. But this candlestick is having what? A higher wick. And then the high wick is what is very, very dangerous because what this is telling us is that sellers are coming into the market. So you cannot just trade this candlestick like that because it has a higher wick. The higher wick is indicating sellers are coming into the market. If we see a bearish candlestick like this, with what? With a little bit larger wick also, like this, and also like this. The wicks are a little bit high. there is no need for you to trade this kind of candlestick because it's showing what the buyers are coming into the market. The buyers are coming into the market. Before you trade this kind of candle, you have to get what? A bearish candlestick closing below this wicks before you can trade this kind of market. So please just go to your chart. Either you are using TradingView, MetaTrader, or any asset that you're trading. Go to the chart. You have to be able to identify high momentum candles and then what? A low momentum candles. These are very, very important. You have to know if the buyers are in control of the market or sellers are in control of the market. Now we've been able to understand the basis of every candlestick, the formation, and then the psychology behind the formation of every candlestick you see on the chart. Please, if you have watched the video up to this time, please make sure to subscribe to the channel and leave your comment under the comment section. Now let's move to the next part of the video. The next candlestick we can talk about is called what? A doji candlestick. A what? A doji candlestick. A doji candlesticks indicate what? A real indecision. This is what? A doji candlestick. A doji candlestick indicate what? A real indecision in the market. So if you see a doji, it indicates a rare indecision in the market, meaning demand is equal to what? Supply. This is an example of what? A doji candlestick. With a doji candlestick, the market opens and closes at the same time. You may see different kinds of doji. These are all dojis candlestick. The market opens and closes at the same time. The psychology behind the formation of a doji is that when the price open here, okay, the buyers were able to push the price up. The sellers in one way or the other managed to do what? To pull the price down again to where the opening price is. Again also, the sellers managed themselves to push the price down. The buyers again, in one way or the other, they flex their muscle, push the price up again. So at the end of the session, the market opened and closed at the same place. That is called what? A doji candlestick. So a doji shows a clear indecision in the market. Neither buyers nor sellers are in control of the market during that specific period of time. So if you see a doji, please don't try to trade a doji. We don't trade a doji candlestick. If you see a doji at the support, read a bearish confirmation, you can sell the market. If you see a doji at a resistance or support, you can do the opposite side. Now you have two types of doji. We have two types of doji. Number one, we have what we call it what? A gravestone doji. A gravestone doji, and number two, we have what? A dragonfly doji. So we have two types of doji. You have a gravestone doji, and then we have what? We have a dragonfly doji. Now this video, I think I'll end this video here. The next part of the video, this will be the end of this chapter. The next part of the video, I'll go into details about the formation of every candlestick and then the psychology behind the formation of those candlesticks. Now I'm done with the basics. The definition of candlestick is done. The formation, how to determine a bullish and then a momentum of every candlestick. The next chapter of the video, we will dive into more details. You will start with doji, spinning top, engulfing the haramis,